Once again, let us start a discussion of case study. We are into case study number 23. I hope all the case study whatever we have discussed till now, that is from case study number 1 to case study number 22, you have already listened. Let us now discuss this. H Limited is engaged in the trading of kitchenware product with the distributorship of various branded products. The company has a strong dealership network and has decided to take warehouse on the lease basis. Okay. While exploring the option for the lease premises, the management found certain properties in the northern and western India that were available on distress sale. For these locations, the management analysis that the best option was to buy the property instead of obtaining it on lease. Okay, sir. Accordingly, H Limited purchased a warehouse in northern India for 50 lakh on 1st June 2017. Further, company incurs stamp duty charges of rupees 5 lakh. This will be capitalized, and the court fee of 2 lakh on registration title of the property in the name of the company. So this will be also capitalized. H Limited had to incur major renovation expense of 20 lakh to ensure that warehouse is ready for use, that is storage of high quality branded kitchenware. So of course 20 lakh will be also capitalized. The renovation expense were made by obtaining a bank loan on 1st June 2017 at a fixed interest rate of 12% per annum. So it means 20 lakh loan has been obtained. The warehouse is ready for its intended use on 1st April 2018. So of course, can you see this borrowing is for the borrowing has been taken for northern India renovation. So of course it is a specific borrowing, and because the warehouse is taking substantial period of time for getting ready for its intended use, means from 1st June to 1st April. So it is around how many months? It is around 10 months. Of course it should be considered substantial also. However, you may also assume that it is not substantial, but I will say better assumption is what? It is substantial only, and therefore it will be a qualifying asset. Got this point? So what will be the total amount of cost? The cost will be 50 plus 5, 55, 55 plus 2, 57, 57 plus 20, that is 77. So 77 will be the cost which will be capitalized, correct? Now plus the borrowing cost. The borrowing cost you need to calculate for 20 lakh into the rate of interest is 12%. For how many months? From the loan was taken on which date? On the 1st June only. The loan was taken on 1st June. Correct. It will be capitalized from 1st June because the expenditure of renovation also started from that date only. Got this point? And it was ready for its intended use on 1st April. Means you will capitalize up to 31st March, means 10 months. So 10 by 12 how much? So 20 into 12% into 10 divided by 12, how much it is coming to? So it becomes 79. 79 lakh will be the total cost of warehouse. Chale? Yes sir. H Limited also purchased a property in Western India for 70 lakh. As on 1st July 2017, the company paid a consultancy fee of 2 lakh to the real estate expert for an opinion on whether the property can be acquired or not. So some consultancy fee was paid for getting an opinion whether the property can be acquired or not. Okay, this is not incremental cost. This is not directly attributable cost, because even though the property is not acquired, you have to pay this amount. So this will not be capitalized. So this is the consultancy fee, which is not an incremental cost. Only incremental cost is directly attributed expenditure which will be incurred because you have acquired the property, that can be capitalized. Further, the company incurred stamp duty charges of 7 lakh. This will be capitalized, and the court fee of 3 lakh. This will be capitalized on registration of a title of property in the name of the company. The useful life of the renovated property is to be 10 years. The total becomes 70 plus 7 plus 3, means 80 lakh becomes the total cost. Chalega? Yes sir. For the other location, H Limited entered into a lease agreement for 4 years. For the 4 year, as on 1st April 2017, on the following term: Eastern India warehouse, annual lease rent of 10 lakh payable at the beginning of the year. Southern Indian warehouse, annual rent of 15 lakh payable at the beginning. It is at the end, it is at the beginning. Chalega? Yes sir. The company has applied Ind AS 17 for lease in the past. So before Ind AS 116, there was the Ind AS 17. Now Ind AS 17 has been deleted, and now we apply Ind AS 116. The financial controller of H. Limited has ascertained that the transition date to the new lease standard Ind AS 116 will be the 1st April 2018. However, now this type of question they will not ask because this is based on the transition provision, which is now not applicable from examination point of view. But read what they have asked. However, due to the complexity of the new standard, he has sought assistance to determine its implication on the financial statement of the company. So they want your suggestion about the implication. Correct now. But you can add on this type of question now. They will not ask in exam, so you can delete it. You can delete it. Okay. The credit rating of H Limited rated by the credit agency is A+. So what is the credit rating has been given? AA+ has been given by the credit agency. The company is in the discussion with the bank for a term loan of 4 year and 5 year, and the bank has offered an interest rate of 10% and 12% respectively for the said term. So for 4 year the rate of interest will be 10%, for 5 year the rate of interest will be 12%. As per the risk matrix, the bank charges such rate for the borrowing with a credit rating of AA+. If the credit rating of the borrower is lower than AA+, then the bank increases the interest rate by 100 basis points. Now, if you have a rate Ind AS 116 from the point of lessee, the discount rate will be either the interest rate implicit on lease or the incremental borrowing rate. So, incremental borrowing rate for the 4 year will be what? 10%, because can you see they have a credit rating of AA+. So for 4 year the rate of interest will be 10%. Let's see what the question they have asked. Although H Limited primarily traded in kitchenware, the company has now decided to make a low-key entry into manufacturing by launching a niche silicone product that seemed to have become popular with the home baker. The development expenditure incurred during 1920 total 3,50,000, of which 1,70,000 was incurred prior to 31st March 2019, the date on which it became clear that silicone product was technically viable. Means this is the date when the recognition criteria for capitalizing development expenditure has been satisfied. Means before that whatever expenditure has been incurred will be charged to profit and loss account as an expense. So out of 3,50,000, 1,70,000 will be charged to PL as an expense, and balance 1,50,000 can be capitalized as an intangible asset. The new product will be launched shortly and recoverable amount is estimated at 1,40,000. So what is the carrying amount? 1,70,000, recoverable amount 1,40,000. Therefore, can you see we need to perform impairment testing on an annual basis irrespective of indicator for any intangible asset which are under development phase. So can you see the carrying amount will be 1,40,000 and the difference will be impairment loss. On 5th April 2020, a fire broke out in H Limited godown in Eastern India. The godown has been under lockdown due to onset of COVID-19 pandemic and there was no staff present. The neighboring villages informed the fire brigade almost 3 hours later, by which most of the inventory had been destroyed. The inventory was estimated at 20 lakh. The financial statement as at for the year ended 31st March 2020 are authorized for the issue on 30th April 2020. Because the fire was brought down after 31st March, after reporting date. So can you see this is a non-adjusting event because the condition related, because this non-adjusting event relate to the condition arising after 31st March, after reporting date, it become a non-adjusting event and therefore only disclosures for the loss is required. Correct? Yes sir. Let's see what are the questions. Point number, what is the depreciation charge of Northern India warehouse for the financial year 17-18 and financial year 18-19 to be debited in SOPL? So let us calculate depreciation. So what was the cost we calculated? We calculated cost. It become ready for use on 1st April 2018. Means can I say depreciation will commence from 1st April 2018 only. So for 17-18, so depreciation will be nil. Depreciation will be nil. And for 18-19, depreciation will be 79 divided by 10. Means 7,90,000. 7,90,000. Simple, very simple. Let's see which option is correct. The depreciation charge of both year. This is not correct. Depreciation charge for the financial year first year is 4,75,000. This is also not correct. Depreciation charge for the first year is nil and for the second year is 7,90,000. This is only correct. This is also not correct. Understood? So option number C is correct. Point number 2. What is the depreciation charge of Western Indian warehouse for the financial year 17-18 and 18-19? Let's see. So what was the cost price? We calculated cost price for 80 lakh. It was ready for use On which date? So nothing was given. So can I say on this date will be assumed that, means when you purchase will assume it become ready for use, because there was no renovation. Renovation was in this particular case. So 1st July 2017 will be the date when the asset will be ready for use. Correct. Now in this case, for the first year, depreciation will be based on how many months? From 1st July to 31st March. So 1st July to 31st March means how many months? It is 9 months. 9 months. So 80 lakh divided by 10. 10 is the useful life. Correct. Into 9 divided by 12. So first year it will be 6 lakh and second year it will be 8 lakh. 8 lakh. So 6 lakh and 8 lakh will be depreciation. Let's see which option is correct. The depreciation for the first financial is 6 lakh and the second financial is 7 lakh 90. This is not correct. First year 6 lakh and second is 8 lakh. This is correct. This is also not correct. This is also not correct. So option number B is correct. Chalega? Yes, sir. Next point. What is the discount rate relevant for the application of new lease standard for the two warehouse property taken on lease? So even though that particular para was not relevant, but can I say they have asked you about a discount rate, or discount rate will be based on the incremental borrowing rate, and incremental borrowing rate for the 4 year will be 10%. So interest rate 10% is taken as discount rate. So this type of question can be asked. Correct now. So that particular the credit agency wala para, that might be relevant from examination point of view. So interest rate 10% is taken as discount rate. So option number A is correct. Point number 4, in the financial statement for the year ended 31st March 2020, how should H Limited recognize the development expenditure in relation to silicone product? So of course, can is a 1,40,000 will be capitalized. So recognize the expenditure of 1,70,000 in PL, but this is not correct. The total debit to PL will be first means 1,75,000 was charged to PL and 1,75,000 minus 1,40,000. What was the impairment loss? So 1,75,000 minus 1,40,000. So impairment loss was 35,000. So total debit to PL will be 1,70,000 and 35,000. So this option is not correct. Recognize, because they have said what? They have asked which one how should S Limited recognize the development expenditure. The first one is not correct. Recognize the expenditure 1,40,000. This is also not correct. Recognize an intangible asset. This is also not correct. Recognize an intangible asset of 1,40,000. This is correct. Understood. So option number A also you might use. Correct now. But you can see 1,75,000 will be charged to profit and loss account. But after once the technical feasibility was achieved, after that you need to perform impairment testing. In that there was some impairment loss that will be also debited to PL. Correct? Yes, sir. In the financial statement for the year ended 31st March 2020, how should H Limited reflect the loss of inventory due to fire in the godown? Already we have understood that this was a non-adjusting event. So option number A, credit inventory by 20 lakh and debit loss. This is not correct. Disclose the loss of inventory in the notes to account. So option number B is only correct because this is non-adjusting event. First read all the option. Credit inventory by 20 lakh and debit loss of inventory in SOPL with an additional disclosure. This is also not correct. Disclose the loss of inventory as a footnote on the face of balance sheet. On the face of balance sheet we never disclose. We disclose in the notes to account only. So option number B is only correct. Let's see. Point number 1, option number C, this only we have done. Point number 2, option number B, this only we have done. Point number 3, option number A we have done. Point number 4, option number D we have done. Point number 5, option number B we have done. Got this point? Over. Easy, very simple. So now I think with all these you are getting confidence. Just mention me in comment box whether all this case study is helping you or not. Correct now. Mention in the comment box all this case study discussion whether you are getting it right or not and whether it will build your confidence or not. Confidence is required. The MCQ question will be very easy. Believe me, it will be very easy. Okay. Chalo. Next video will meet with the next case study. Till then, bye bye.